Good morning, everyone. Can you type in the questions to let me know that you can hear us loud and clear?
Looks good.
Perfect. Okay, so my name is Michelle. I'm part of the training, and I've also got Carter from Republic, and he's going to be presenting what we're going to be offering with them this season or this upcoming season for our CIT and Republic partnership. So all you, Carter.
Hello, everybody. It's really nice to get a chance to meet with you today. We're hoping to have an excellent season with you, and feel free to ask any questions that you have as we go through this. I'm going to give details pertaining to the general overview of the program and your preseason, in-season money that's available to you as well, and some of the special concessions we made for the wonderful CIT group. So let's get started. So Republic's excited to be a partner of Community Income Tax. We have a good relationship there, and we've actually built a really good relationship with you, the preparers. We've also talked with you in the CIT forum on Facebook. Really good information out there. So let's get into our program for this upcoming year. So first and foremost, as you know, with CIT, it is a very unique, clever, competitive way to offer your services in which the fee is assessed. Although we also make our products available to you as well for you to be able to be competitive in the marketplace. And this year we provided a little bit of a contrast in our program. So this year, what we did is we listened primarily to the feedback we got pertaining to our EA Plus, and we made some changes with it. Hopefully these are changes that you digest well and feel good about. So our EA Plus, we did not change the top loan amount. It is still $500 to $6,000, but we did make some changes with respects to the tiers. One of the things we heard from you was that, hey, it appears there's some missing tiers. So we added $1,000 and $4,500. The net refund amounts, they appeared to be a little bit higher than the loan in terms of what taxpayers were eligible for. So we lowered the net refunds amount, which you can see from the second column. And as you notice, in order to be eligible for the $500 loan, you just must have a net refund of $500. The $1,000 and $1,500 we grouped together to be used interchangeably, and those are $2,000. And then every other loan amount is $1,000 net refund from the actual loan amount. The fee is $45, and our APR is fixed to the taxpayer. It will not change like Metas or TPGs depending on the amount of days funded. What you disclose to the taxpayer will be the same APR regardless of what the taxpayer gets. Our regular loan starts during the controlled launch, which is hub testing is what it used to be called, and the IRS has said to date that they intend hub testing to start on January 13th, with the first day of regular filing to start on the 21st, keeping in mind the 20th is Martin Luther King. Now, what that means is that's a whole week less of hub testing as it was last year. Last year, with it starting on the 28th, they actually went 2 weeks into hub. They're disclosing that it's a week less. So one of the other things that we did, especially knowing the percentage of direct deposits has increased from the previous year to overtake checks, we made our loan eligible for all disbursement types. We are not limiting to just checks and debit cards. You have it for direct deposits, checks, debit cards, and Walmart direct to cash. And we fixed the largest concern that we heard this prior year, which was the flip to check. For the upcoming season, if in the instance the taxpayer gets an amount different than what they applied for, it will no longer flip to check. It will follow the initial disbursement method requested. We are going to be mailing TILAs and only TILAs to the taxpayer. So what the taxpayer will receive is only the amount of the finance charge and costs associated with the loan. No other fees are disclosed on what's being sent to them, but that was our being able to show that to them without having to require to put it on a check stub. So you start off a taxpayer as a direct deposit, they will remain a direct deposit or a debit card or a Walmart direct cash. They will not flip to check. Taxpayers, again, can choose the amount they're eligible for or below. Interestingly enough, last season, more than 25% of taxpayers selected an amount less than what they were eligible for. We heard that this was for a couple reasons. One was to control fees. The other one was the taxpayer applied what they thought they could get. But as it was last year, when if the taxpayer is eligible for $6,000, they will see the $6,000, $4,500, $3,000, $2,000, $1,500, $1,000, and $500 as they did last year, and they can select any of those amounts. And then the only unique thing to this season is we are trying to move preparers to designating which program they would like a little sooner. So for our EA Plus Advance, a preparer must have enrolled to express interest in this program by January 24th. We cannot allow people to enroll just to express interest in the loan program after January 24th. We presume that that's 3 days after the first day of regular filing. That should be sufficient to accommodate all preparers' need and willingness to offer the loan. Michelle, are we taking questions after or during the slide?
We can take them during or after. That's totally up to you.
Well, I set out a significant block of time for everybody to make sure all questions were answered, so please feel free to ask your questions now while it's fresh.
Just to reiterate, somebody had actually asked if this is recorded. Yes, it is recorded, and we will post it to our Facebook group. So if you guys have not joined our Facebook group, go look for us, Community Income Tax Partners. And if you have any questions, go ahead and let us know. Judy asked, can we offer holiday loans?
Now, when you're asking about holiday loans, the pre-act is available. We're just talking about this as if it's the regular loan. We have a pre-act slide, which is pre-acknowledgement for the IRS. We will get to that, but that is a portion of this presentation. Now, if you're talking prior to January 2nd, we currently do not offer loans prior to the receipt of the return. You don't have to have an acknowledgement, but you do have to have the return created in the bank app in order to receive a loan. Those start January 2nd. So as far as what your competitors are offering, in the non-independent marketplace as well, you have that same option. But if you're talking about like Jackson Hewitt and Liberty's cash in a flash that starts in December, that's $250, no, we do not offer that. They offer that on the basis that someone comes in, they get that money, and then when they come in to prepare their return, it takes out the money that they received prior from the additional amount from the loan. It lowers the loan amount. One of the main reasons why we don't do this, and one of the things that you don't know about Jackson Hewitt Liberty, is they are saddled with a significant amount of losses from the loans that exist prior to January that happened in December, because there is nothing that locks that taxpayer into them. Those taxpayers could choose to come to you from that circumstance. There is no lock from what they provide. They just hope that it's going to drive more business, and they charge a pretty penny for it because of the losses they're saddled with. Now, did you mean the pre-act, or were you talking about something prior?
I think they were talking about the holiday loan.
Okay. Well, when I get to the pre-act, I'll talk more about that availability, but we do not offer the loans from pay stubs or from the loans that prior to try to get someone to come back in. Typically, the groups are using their own money for that and not the bank's money, so they are saddled with the risk associated with those taxpayers that don't come back in.
Okay.
All right.
Next question. What is the pre-act $30 fee?
We'll get to that. It's on the screen, but we have a pre-act screen, so we'll get to the pre-act in the next two slides. We're talking about the loan, but we'll go to the pre-act. All right, so we'll get there.
Next question. Does the taxpayer pay interest on their cash advance?
On their cash advance. Are you talking about on getting a loan?
I think they're talking about the advance.
Right, so the advance that the taxpayer receives?
Yes.
Is that Okay, so as you see, there's a 35.99% APR to the taxpayer, and it is calculated at a given set of days. It does not vary like with Metas from 25 to 45 days, and the APR does not vary with like it is with TPGs. It's fixed. So that is the finance charge that's charged to the taxpayer. That fourth column is what the taxpayer pays based on the loan amount that they receive.
Next question, why charge the ERO for a fee for a client?
Because we have options, like for instance, we have another option where there is no charge to the taxpayer, as it's just saddled to the preparer. As it is right now, there is guidance out there that says you will not charge a loan to the taxpayer that's in the military with an APR in excess of 36%. The problem with that is in being limited to a 36% APR, you cannot deliver a loan that's competitive in the marketplace based on the loan amounts out there. With a loan that is only available to the taxpayer, that loan typically can't exceed about $2,000, and it's highly scrutinized in terms of eligibility because when you're just charging the taxpayer, you can't exceed 36%, as it was in the RAL days, because back in the RAL days, it was all charged to taxpayer. Once the administration changes or the FDIC changes on their stance as to what can be charged to the taxpayer, then I think you will see more movement where the taxpayer would be saddled with the fee as opposed to the preparer. But the preparer fee was manifested out of the 2012 cease and desist, where the FDIC said making loans to taxpayers where they paid the fee was unsafe, unsound to banks in the absence of the debt indicator. So when the debt indicator went away, loans disappeared for 6 years. And when they came back as the fee being assessed to the preparer, because that was the only way you could offer the loan without having the FDIC or the OCC saying, well, wait a second, you can't do this. So banks have started migrating back to charging taxpayers, but are following the guidance associated with 36%. And unfortunately, 36% does not create a high enough loan amount for you to be competitive with H&R Block, Jackson Hewitt, Liberty, the person down the street. So as I said, until we can get into a place where the administration and the regulating bodies have changed their perspective on that, we don't have a way to, no bank has the ability to deliver you a loan where there is not a cost to you.
Speaking of that, somebody made a statement, many banks don't charge any interest, and why do you charge?
Say that one more time.
Many banks don't charge an interest, and why do you charge?
So when they say many banks, they must not be referring to these products, because these products, banks do charge an interest. There is no bank in the industry offering these products that does not. So if they're referring to banks not charging interest, then they're referring to a bank not charging interest outside of our particular marketplace. There is no other bank in the market providing these products that does not charge interest.
Okay. And then all these other questions as far as like the pre-act fee of $30, is that fee to the ERO? He's already stated that he's going to actually go a little bit more into detail with that, so that way you can get an explanation of those fees.
Yes, correct. I can move on to the next slide, and all questions are great questions. I'll answer every last one of them, but let's get to that slide so we can address it. So let me get to the next section, and then the slide after that is the pre-act. All right? So the other loan that we created was for a segment of preparers that said they want a loan where the taxpayer is not charged, okay, where there is no fee to the taxpayer. So we have a loan where the fee is only to the preparer. It may not suit your particular needs, but there are preparers that have asked for it. So if this does not interest you, you are not required to get this. We call it the EA Office Pay. This loan is only from $500 to $3,000. The net refund amounts are in accordance with what you saw on the plus. There is no charge to the taxpayer. The fee to the preparer is $60 for the loan. The ERO does pay the entire fee. It starts controlled during the controlled launch. Again, available for all disbursement types. No flip to check. The taxpayer can choose the amount they're eligible for or below, and you must have enrolled expressing interest by January 24th. Again, Some preparers have asked for this. You may not be one of those preparers. If that is not you, there's no need to inquire, but for some, they do want this. They want to be able to advertise that it's a loan that's free to the taxpayer to where there's no bank charge. This is that loan. And again, it indicates why it's challenging to offer a loan with a high loan amount with an inexpensive fee. If you notice here, the fee for the loan is $60 and the loan only goes up to $3,000. Essentially, banks price the loan to be as reasonable as they can to not be saddled with losses from extensive loss ratios from preparers. So this is a loan up to $3,000 where just the preparer pays. Okay, any questions? Okay. The Pre-Ack, what many of you are asking questions for, and we may spend a lot of time here answering questions. Remember, no question is a bad question. The Pre-Ack Easy Acknowledgement is basically an advance available to the taxpayer from January 2nd until the first day of regular filing. Remember, when you enroll with Republic through your software, you have not elected to offer the Pre-Ack. You must log in to the Taxpayer Information Center at republicrefund.com and actually opt in for the Pre-Ack. When you opt in for the Pre-Ack, there is an additional premium of $30, and the Pre-Ack is available for the Plus and Office Pay. Essentially what that means is once we receive the tax return and the bank application, we will issue loans very shortly thereafter. You know, for legal reasons, we can't publish this specifically because if just one taxpayer defies it, then it makes it not 100% true. But last year, checks were hitting the street within 10 minutes. So we had a lot of preparers like trying to hang on to the taxpayer before they left so they could walk out with their check to show they had a check in hand. But we make those decisions very quickly from the time that the application and tax return is received. It's up to $3,000 for the Office Pay, up to $6,000 for the EA Plus. We have no additional underwriting criteria for the Pre-Ack to the Post-Ack. We look at it the same, short of the acknowledgement. So if in the instance someone's approved for the Pre-Ack, they don't go back and reapply for the EA. In contrast, if they're denied for the Pre-Ack, they don't go back and apply for the EA because it's the same underwriting criteria. It is available for all disbursement types: check, direct deposit, debit card, and Walmart direct to cash. And we did have the highest advance amount in the industry by a pretty significant margin to our competitors. One of the things is we hear preparers say they want the lowest fee with the highest loan. Unfortunately, that contrast doesn't quite work that way. You want a really good average loan to have a better loan than your competitors have. You know, lower fee lowers the loan. More moderate fee averages to a higher loan. So offices offering loans through Republic last year, on average, had the highest advance amount in the industry compared to others. Taxpayers are able to choose the amount they're eligible for below, just like the regular EA. As I said, checks hit the street within 10 minutes of the receipt of the tax return and bank app was happening. And then this is very important. You reserve the right to opt out for the Pre-Ack at any time. If you opted in prior to January 2nd, then you're going to get checks starting to issue on January 2nd, all the way up through the first day of regular filing. Nights, weekends, Martin Luther King, all the way through hub testing. If you choose to opt out of the Pre-Ack because you want to wait until the acknowledgement is received once hub testing starts, so like you opt in prior to January 2nd and you opt out before the 13th, loans will not be provided until the acknowledgement is received from the IRS. And if you opt out of the Pre-Ack, under no circumstance can you opt back in. You're either in the Pre-Ack all the way up until the first day of filing, or you opt out and you wait for the IRS acknowledgement for the loan to be approved. It's one or the other, but if you opt out, unfortunately, you cannot opt back in. There is no opt-in back. And as I said, it's the same taxpayer underwriting criteria as the Post-Ack Easy Advance, and no first-year preparer that's a filer is available for the Pre-Ack. New taxpayers, of course, they can get the Pre-Ack. But if you're an office that's open for the first time and not filed returns previously, you can't get the Pre-Act. If you have a history in preparing returns and offering these products, then it is certainly eligible and available to you. Okay? Now, I presume there'll be a lot of questions, so shoot.
Will there be a way to lock in customers who are approved for the pre-acts? Last year they got a loan from us and other tax offices.
Wow, it's a good question. So there is something that I'm going to tell you a little secret about, and it's called a Pre-Act database this year. Okay? This is so important. If you hear nothing else that I say on this call, please hear this. There is a Pre-Act database this year. Once a taxpayer applies for a loan, it goes into a database. If they try to go somewhere else and apply for a loan, it will reject them for having applied for a loan somewhere previously. So many preparers often wait to transmit their returns to the transmitter to put in queue before it goes to the IRS. And in the pre-act period, obviously they're just stockpiled before the first day of filing. You want to make sure that you're sending your pre-act returns off right away. Because if you're the first one in and another program who is TPG, Meta, Jackson Hewitt, and Liberty, I think H&R Block is the only group not participating in this pre-act database, which is interesting because they suggested it, and yours is in first, then it will deny the loan elsewhere if they try to go someplace else. So the answer to your question is yes, but this depends on, one, did they go to H&R Block versus the others? And two, were you the first person to get that in to go into the database so the second submission seen that they already applied through you? This essentially protects you, but it also protects the bank. It keeps us from getting multiple loans, each transmitter getting multiple loans prior to the acknowledgement period, right? Because if they go to you and get a loan, and then they go to Jackson Hewitt and get a loan, the real question is what acknowledgement got accepted by the IRS first to ensure that person gets paid? Because you as a preparer certainly don't want to spend your time preparing someone's return, getting them a loan, and then having the return fund elsewhere for them to get paid. You did the work, you deserve to be paid. And we would also like to be paid on the loans that we provided. So this, in essence, will help you. We do hope to get everybody under this guise in the future. But as of right now, it's a pretty large percentage of the marketplace that's participating in this, which does protect you as the preparer if you're the first one to get that out. So please do not sit on your returns to send up until the end as it relates to the pre-act. Get those off right away, so if you get that time date stamp first, it definitely helps you. Good question, by the way. Any other questions?
If the return is rejected, will you still process the pre-act loan application?
The pre-act happens prior to an acknowledgement, right? So it's you don't know it's rejected until the pre-act loan application's been processed, right? The other part is a return can be rejected and then someone can subsequently mail it in to still get it filed. Like for instance, these IP pins, right? During the pre-act period, you're filing these, but when the IRS gets it, if the pin's not right or not there, they'll reject it and you have to mail the return in. If you mail it in routed to us, it will still fund through us. But the return being rejected is after the decision has already been made on the pre-act. There is no way to remove a pre-act that's already occurred. If you're starting on January 2nd, you couldn't possibly see a rejection till January 13th. So that loan has either been approved and paid or rejected long before the 13th. So there is no way to remove the application because this has all occurred before you could have possibly received an acknowledgement or rejection from the IRS. Now, if it's rejected as in terms of a file, like the application is incorrect, it can be corrected and resent, but the return itself from the pre-act period is locked because you're not supposed to file for an advance until you're ready to file the return. Another good question.
It is. Another. When is the prepared charge for Pre-Act EA Plus?
So what happens is the fees are assessed to the ERO on the basis of the approval of the loan. If the loan is declined, then there is no charge. It's based on it being approved. So they basically go into what your report that's called the Easy Advance Fee Status. So as you begin funding in the hierarchy for the way that your fees are provided to you, you are paying a portion of the fees associated with the approved loans. It does not come out of your in-season fee assistance. When you're getting the fee assistance with us, the half of your tax prep fee upon acknowledgement, no fees come out of that. That money is based on 50% of what's acknowledged. But when the IRS begins to fund, you start paying the fees associated with the loans that were approved, only approved.
Are the finance fees the same for pre-acts, I'm assuming, as advances?
Yes. With respects to the taxpayer, one of the things that sets you apart from your competitors is that fee is uniform across all loan amounts, or APR is uniform across all loan amounts in all programs. It's 35.99% and it does not change. So it won't be like, EPS where it starts at 25 days and goes up to 45 days. It won't be like TPG where it's 16 to 45%. It's fixed at 35.99% of the loan amount. Now, before you ask the next question, let me also address the $30 fee. Last year, the pre-act fee was $25. Okay? We added 2 tiers and lowered the net refund amount. Our average loan amount should go up significantly. The pre-act, unfortunately, is painful. A lot of losses for both of us happen through the pre-act. So the cost associated with the pre-act is as it relates to the average loan. We added 1,000, we added 4,500, we lowered the net refund amounts. That means the average loan should go up. And in terms of comparison in the industry, Meta's is 75, TPG's is 80. So you're at the amount of the pre-act standard to the industry or less, not more. Any other questions?
If they are not approved for the pre-act, can they be approved for the regular advances?
Right, so I addressed this earlier. Our pre-act and our post-act, the regular EA, are the exact same underwriting criteria. So if you're not approved for the pre-act, you're not going to be approved for the post-act because there's no difference in the underwriting criteria. It's exactly the same. The only difference is that the acknowledgement was received, but the acknowledgement isn't a circumstance for our approval or decline. We have the same criteria, which is why our approvals on average are higher than our competitors because they have different criteria from the pre-act to the post-act. We don't.
Can you go a little bit into detail as to what criteria you're looking for?
Are you talking about for loan approvals?
Yes.
Taxpayer loan approvals? Unfortunately, no bank discloses specific underwriting criteria of the loan for the taxpayer. I mean, the one thing I can share with you is if you have an experience with that taxpayer, having used you in the previous season, then the chances of approval are always higher. Where there's a history with the taxpayer, that is always better in the circumstance in terms of approvals and the approval amount. First-year taxpayers to you, or unless they were already in our database, are more hairy because they don't have a prior year circumstance to show what their refund amount was, when it funded, when it was, those types of things. But no bank discloses real specific criteria outside of experience matters. The longer you're with a bank program, the more experience you have with a taxpayer, a better circumstance for that taxpayer. So when a new taxpayer comes to you this year, let's say, the probability of their return funding is low and they got $500. Well, if they come in and the act amount is what funds, then they likely are to increase in their loan amount each year, which is good because that makes them also happy with you. But outside of that, there is really no specific information I can provide to you as to taxpayer underwriting criteria. We just have some real hard and fast rules. We don't do deal killers like the other banks do that keep you from filing it. You just can't do like an 8888 where you're splitting out the refund. Simple things like that. But in terms of the model and tree for who's approved, yeah, that is very sophisticated, not something you typically go into based on inquiry.
What programs can a first-time e-file office qualify for?
So we actually allow first-year offices to offer our regular advance. We just don't allow them to do the pre-act. Let's be honest, the pre-act is much more challenging as losses are difficult for all of us with the pre-act because they come in so early, and take a chance of going somewhere else, where we hope this pre-act database will help us all out. But if you're a first-year preparer, we realize that you have to be competitive in the marketplace. So as it relates to first-year preparers, we do allow them to offer our loan and RTs, but we don't allow them to have our pre-act. We want you to be competitive, but we can't give the whole kit and caboodle till you have at least a year under your belt.
Can a self-employed client get a pre-act?
Schedule C, yeah. But you have to keep in mind, I actually did the math on this last year because that was a big question. Last year, Schedule C's had a 70% approval rating for the pre-act. But keep in mind, is this a client that's been coming to you every year and providing a Schedule C and is funded, or is this a first-year client that's come in and they have a W-2 at $17,000 and they have a business for which they offset their taxable income to increase their refund without a verifiable history or proof of having that business? Those things become more complicated in terms of approval. Where there's a history there, absolutely. Where there's not, they could, but it depends on the circumstance. Because banks are very weary about people using that for the purpose of reducing their tax liability from their taxable income. But that's not to say they're not approved. They are. We know that's a very significant circumstance for how our world turns in this marketplace.
So do you have to have a W-2 in order to do the pre-act?
Well, you can't do it from pay stubs. It needs to be that the return is ready to file. You don't want to do returns from pay stubs because it can get you in trouble and it can cost losses as well. You're not supposed to do the loans without it. But in order of filing a return that's eligible to receive a bank product, it does not require a W-2 alone. There are people with Schedule Cs that get loans as well that are straight Schedule Cs. Yes.
Will I be considered a first-year tax office if I already have 2 offices with Republic and opening a 3rd office with a new EFIN?
You are absolutely not considered new, but that new office is considered new. So your 2 offices that have history with us, that history matters. And when you enroll a 3rd new office, we, look at that with respect to the 2 offices you have. But there is no verifiable product history under that new office. Now, having said that, if any of your taxpayers from any of your other 2 offices went over to your new office, then all that history for that taxpayer counts. Taxpayers, it doesn't matter where they're at. If we have them in our system for a prior year, then that history carries forward regardless of where it is. But with respect to the office starting off brand new, that is perceived as a new office to Republic. That office, with the absence of history, typically wouldn't have the pre-act, which means you direct those taxpayers that wanted it to your 2 offices that did. Your new office would have the advance, and then after a season, be reevaluated for the pre-act in the upcoming year. But your taxpayers aren't considered new. I hope that makes sense. I know that's a little confusing.
Speaking of which, when we brought on new customers this season, if they have history with other banks like Refunds Advantage and Santa Barbara, how does that work?
So what happens is if you're not new, you can verify information pertaining to your performance in a previous year bank to become eligible for our product. So for instance, if you're new to Republic, but not new to the industry, and you want the pre-ac, then what we ask is that we get what your funding rate was, to determine that your funding rate was of an excess of 85% to determine that you'd be eligible for the pre-ac with Republic. So your experience matters. We just have to have a verifiable history in order to make you eligible. We are not going to make it difficult for offices coming to us from being able to offer products. Just have to show basically that you offered those products somewhat successfully in order to be eligible for all products. Like, we'll even do pre-season money. So like if you used Refund Advantage or EPS last year and you need pre-season money, we'll get to this, but for CIT, you only have to have had 50 products, and we just look to see what your funded RTs were and your tax prep fees paid were in order to make you eligible for the pre-season money. So your history can carry over. We just have to see that history.
And how many years of history is the minimum qualification?
1 season.
There you go.
Yeah, we're not asking you to have invented the wheel. We just need to have something that shows, hey, I know what I'm doing here. And 1 season is adequate.
And as he stated, it's a minimum of 50 bank products from the previous season.
For the pre-wrap, yeah. And I have a slide on that, so let's not get too deep into the pre-wrap until I get to that slide. Any other questions about the pre-ac?
Is there a budget EA option?
A budget EA. Unfortunately, until we can have a scenario to where we can offer that type of product without creating a significant amount of risk, we are still working on it. So we are currently working on an option like that to be available to you in the future. The problem is, one of the banks decided to break the 36% guidance this year, and we're kind of looking to see how that pans out, because what we would ultimately really like here is if we could go back to the way it used to be, where taxpayers are paying for the loan, you guys were earning money for your services and not having to budget for that expense. We're just not there yet, because even under the current administration, which is much more amenable to that action, the prior guidance kind of precludes us from doing that without potentially putting us all at risk. We don't want to put your business at risk. We don't want to put our business at risk. So we're moving in that direction. But currently, that is not an option that we have for you this year. And I know, trust me, I'm on this side of it. I would much rather it be something where you guys had a great season, really excited, and the fees were something that you could get behind. But in order to offer a product with a loan that high, it's a little hairy. You know, $6,000, one loss for how many returns fund? It's a lot. It's a lot. Next question. That's a good question, by the way.
Just to confirm, if I did a pre-ac loan, I would pay a $30 fee and a $45 fee, and then the CIT fee of $15.
Right. Well, now the way the CIT fee, that actually works out right, because we adjust the tax prep fee by $15 for the CIT. Correct. Now, keep in mind that's only during the pre-ac period. Once you go to the regular loan, the $30 falls off. And as I said, you have the ability to opt into the pre-ac period and then opt out during the hub testing period. I just say that with a grain of salt, because checks are provided so quickly through the pre-ac that if you opt out and you're waiting for acknowledgement during hub testing, acknowledgements come really willy-nilly, and it's not as reliable. So if that fee is a really big concern for you, you can opt out like on the 12th. So on the 13th, it only happens once you receive an acknowledgement. But based on some returns not being acknowledged, or nights, weekends, Martin Luther King, that puts you at a competitive disadvantage with those offices around you. They're just printing checks regularly. But, you know, having a $6,000 loan, it definitely, drives that average fee. You know, imagine if there wasn't a taxpayer fee, it would be closer to cost prohibitive. You know. Next question, a good question too. These are all good questions. You guys are awesome.
Indeed they are. Any other questions, everyone? Here's a very important. Can we add a line item to offset?
You know, whoever that person is, I'm proud of you. It's a good question. Now, I'm a bank. Answering this question responsibly as a bank, here is the bottom line. This is also very important, okay? The very specific guidance around this is you cannot charge the taxpayer, you the preparer cannot charge the taxpayer for the purpose of receiving a loan, okay? But if you make an adjustment to your fees to all your taxpayers, you are not breaking guidance. So for instance, if you know that you do 200 loans, right? And you know that that fee is either the 45, well, all 200 loans wouldn't be 70 because not all are pre-act, but based on the cost to you for the loans, like especially if you used Republic last year and you wanted that report to see what you paid for loans. If you make that number divisible by all your taxpayers, you can adjust your fees by that amount because it's essentially inflation. It's the cost of doing business has gone up for you. But legally, you have to disseminate that cost across your whole book of business because you don't want to get in trouble with the IRS for having a charge that you charged this person because they received a loan and this person that didn't, you didn't. That becomes a problem for you. But if you had an effective increase of $7 across all your taxpayers to offset the cost that you're paying for advances, that's the cost of inflation. That's the cost of doing business. So the line item to offset, the line item would have to be to offset all taxpayers, not just taxpayers receiving a loan. So the answer is kind of a yes and no, and I think you hear where I'm coming from. That's a good question too. I'll tell you what, these questions are great.
I know. Does our office receive compensation during the pre-act season?
Compensation. I'm confused by what do they mean by compensation?
I wonder if they're fees is what he's asking. So how does
you mean like when the IRS funds or are you talking about like the in-season fee assistance? I mean, we have a couple things. I just don't want to misanswer the question. So I'll just go from what I know that we have and then
I think they're referring to like when January 2nd comes around and they start doing the pre-acts, are they going to be given access to their fees or do they have to wait until the IRS funds the product?
Oh, no. You know what? Well, that is a pre-act question. We'll get to the wrap, but we have pre-season money that you're eligible for. If you're a prior officer with the Republic, it's anywhere from $3,000 to $40,000. It could be less than $3,000 if you're smaller, but only did 50 products. If you're a new office, we can only lend up to $20,000, and that starts on November 18th. If you're a renewal, if you're a brand new office to Republic, it's 12/6 through 12/27. That's pre-season money. The in-season fee assistance is that we send out 50% of your tax prep fees upon IRS acknowledgement. So every return that you have acknowledged, you can get advanced up to 50%. Now the pre-act goes through hub testing. So acknowledgements actually start coming on the 13th. You will start earning RAP, which is your in-season money, during the hub testing week. We start on the 14th. So our RAP money starts on the 14th. But in order to get the in-season fee assistance, the return must be acknowledged. In terms of any revenue or money that would be available prior, that's our pre-season money. But outside of that, there's really no avenue for revenue from the bank outside of I either got money in advance of the season or I'm waiting till acts are coming to get up to 50% of my tax prep fee, which we call RAP. And I've got a couple more slides for that too. And that is kind of a pre-act question, but we'll get into wrap and pre-wrap here shortly too on the other slides. I hope that answered your question.
That was a good answer.
Okay.
Process to obtain the ARBN number. Is it going to be the same process as it was last year, that they have to go in and log in, do the training, and then they'll be provided with the ARBN?
You know what? I'm so glad the person answered that question, because it allows me on behalf of the bank to apologize. All right. So the ARBN. The way Republic does it is we'll ship all your supplies out. We just won't accept your first B record until you have an ARBN. And what that is you have to take a compliance test. And when you take that compliance test, you get your ARBN number. As of right now, we expect the compliance test to be available November 24th. What we relate is that every preparer involved in offering our products to taxpayers must take the test to get an ARBN. The actual physical requirement is that each office at the very least have an ARBN, because, you know, those applications come in with ARBNs to show you took the compliance test, right? So starting November 24th, you're going to log in. You're going to take the test just like as you always have, but it's a new test, not the old test. You'll get the ARBN. This year it will be designated by an R, and then the year, and then the algorithm. So you'll know that this test was from this year versus last year, because let's be honest, that ARBN number can be confusing. So we've added something to make it more transparent as to the year you got it in. And then once you put that ARBN in, you begin filing returns with use of that ARBN. So it's the same thing as what you're accustomed to. The only thing that we changed up this year is we added the tax year after the R, so you can tell that it's for this year as opposed to last year, because I work here and I get confused with ARBN. So I can't even imagine what people that don't work here, how they get confused with ARBNs. I hope that answers your question.
Now, how does it work with all the rest of the preparers in the office as well?
Well, okay, so here's the deal. In terms of from a compliance standpoint, we ask that everybody in the office get an ARBN that deals with products, because we want to see that they know how to responsibly offer our products. The way that it actually technically works, though, is that if a single office with multiple preparers has one ARBN, that ARBN will work through the office for everybody, but that's really not kind of meeting the request of already dealing with products getting an ARBN. So each preparer that gets their ARBN, I believe they set it up in the preparer use. You would know better than me, Michelle, how they set that up in the software. So it just carries forward to every bank application that they do. So you only have to set it up once. You don't have to enter it in each time.
Yeah, so once we actually go into training, I'll show them how to set it up in templates so that it flows to where it needs to go.
Right. So, but if each preparer got their ARBN, they'd set it up in the template for themselves, so it would just flow to every bank app. If there's just one for an office, they would set that up in template so it flowed to everybody's bank apps. But in either effect, you only have to enter it in once when you set it up to carry forward. It's just once you do it, make sure you get that set up so you're not getting any rejects, because it's like, we don't have an ARBN or we have an invalid ARBN, because the last thing we're trying to do is saddle you with more work when it's the busiest time of your year. We get it. We go through the same stuff. We're just on the other side. We are not trying to make it more challenging for you. We're just a bank. So the way we do is that the ARBN shows you took the compliance test, rather than, well, we won't ship anything to you until you take the compliance test. No, we'll ship everything, get you all set up. We just won't accept bank products until you've taken that test and gotten an ARBN. Hope that makes sense. November 24th is the date that we anticipate that being available. And we took down last year's test, so there's nobody taking last year's test thinking they're taking next year's test. If I was in your shoes, I'd be annoyed too, so I had them take it down. So when you see the test out there, you'll know it's the new one.
And that will be on the Republic website, not our website. So once it becomes available, you'll get in there, do the compliance training, and then you'll get assigned an ARBN.
Correct. All right, let me move to the next slide, because I think some of these questions are going to be related to some of the future items, unless, you know, there's one more about pre-act, because it doesn't matter what slide it's on. You can ask any question you need, but I'd like to get through some of the items I hear people asking about now, because I think it's of interest.
Yes.
All right. All right. So wrap, which is what some of you have been asking about. Okay. It starts during hub testing, more specifically on the second day. So if they're saying the first day, the IRS is saying the first day is on the 13th. On the 14th, we start gathering your acknowledgments per day. For all taxpayers acknowledged, 50% of your tax prep fee. So if you have a $700 tax prep fee, it's $350 per taxpayer, whatever that is, and that goes out in daily deposits. So on the 14th, it starts, and it goes all the way up until like February 7th, I believe, February 6th, where 50% of your tax prep fees, once acknowledged, will go out daily until it's over. Okay? It eases your cash flows during the beginning of tax season, especially if none of your taxpayers can pay you up front. And it's 50% of your tax prep fees at the beginning of the season. Now, it's up to $250,000 per office, but keep in mind, okay, if you enrolled with Republic and you only put that you did 20 bank products in there, it's going to default you to the $50,000 tier. But anybody can be moved up to what they're eligible for. We just have to know. So if we don't know what you did last year, it'll typically default at the smaller amount, but it goes in increments of 50, 100, 150, and 250,000. So if you're setting at the 50 and you're like, oh no, mine's going to be more than that, let us know. We'll change it so you can go accept the terms for that and it be a higher value. We only charge 2% on your wrap, which is your in-season. It's a flat fee. We don't charge you per month, like the other programs do. It's just 2% flat fee. And once funding begins, we only collect back at 50%. And then right before the PATH Act funding, we go to 100% because we try to get the most of your payment back out of the largest funding you get in the year, as opposed to nickel and diming, so you don't have the trickle coming through when funding occurs. Okay? The only change for this year is if you're a brand new office to Republic, because we do it for first-year offices, you're limited to $300 per taxpayer. So that means up to a $600 tax prep fee, you'll get $300. If your tax prep fee is $700, you'll still get $300, only for your first year. All returning EROs are not limited. They get exactly 50% of their tax prep fee up to the max amount. Unfortunately, this happened because we had some offices that figured out how to get returns acknowledged without them funding last year. And so we had to put in some limits for new offices. But that limit is comparable to the rest of the industry. The fact that we don't have a cap on our renewals is different because the others do, but that is only for first-year offices. Now, the opt-in for the wrap and pre-wrap became open today. If you're once you enroll with Republic and get accepted, you can opt in, and the opt-in stays available for wrap all the way through February, and for pre-wrap all the way through December 21st. So just because you haven't opted in, it's not a problem because the opt-in is going to remain open. It's not going to be an issue for you at all. In fact, we have set something aside specifically for you, so when you come in, you'll be fine. Don't stress about it. We're ready, willing, and able to help. Okay? Any questions on this one before we go to the pre-wrap?
Was it always the 2% origination fee?
It's always been 2% for Republic. And trust me, it's better than what the other programs do, which is like 1.5% per month. And then when they cut it off, based on when it cut off, it actually ended up being closer to over 3% for their wrap than our flat 2. We just do a flat 2, period. Good. Whatever you get total is 2%.
Perfect. As far as the bank enrollment through us, we are currently working on that, and Alexis will send out more information as we get it. So don't worry, we'll make sure to get you in time for you to be able to get those fundings that start on the 18th.
And not only that, we're aware of this too at Republic. So we are actively working with CIT to literally keep all the seats open for you all. So do not stress about it. Republic is happy to help. Just don't stress about it because we got you covered. We're keeping it in mind. All right? So let's move on to the pre-wrap. All right. So there are a couple changes here Nothing bad. We are actually going to start providing money beginning November 18th if you were in office that used us last year. You can get it as early as the 18th. I mean, it may not reflect in your account till that Monday. Hold on, November 18th is Monday. It may not reflect in your account till that Tuesday or Wednesday, but it's going to go out on the 18th. If you're a new office or a renewal, but new in particular, then money starts going out on December 6th through December 27th every Friday. And we're allowing you to opt into this all the way up until December 21st. So if you fail to do it or you change your mind and need it, you have until December 21st to decide you need to do this, okay? If you're an office that's been with Republic, it's $30,000 to $40,000 per office. We made a special exception for CIT where you only have to have 50 products to be eligible relative to our normal cutoff of 100 products. So CIT is the only group in Republic that can do it for 50 RTs. As I said, the opt-in through the TIC is today through December 21st. It does not exceed more than 10% of your prior year fee revenue. Let me put this straight to you, okay? A lot of you have been getting calls being offered a ridiculous amount of money from another program. But you need to keep in mind on the front end, it's good to get money, but it comes due later when those amount of money, that money that you're earning is important. And it does not matter how much money you're being offered if the program doesn't work. Because at the end of the day, you have to offer a good season to your taxpayers with a good approval rate on your loans, good average loan amount. Don't be fooled by the white horse. Know that we try to design this in a way that helps you, but still leaves a lot available for you on the back end, and we're going to have an excellent program. So do not be fooled by these offers, okay? It is an act of desperation. For the pre-wrap, we charge a flat 3%. Yes, we charge a little bit more money on our pre-wrap, but that's because at times with the pre-wrap, we do get burned. Some people do take the money and we don't get it back, so we had to charge a little more on our pre-wrap than our wrap. The advance is repaid through tax preparation fees, and brand new offices to Republic will be limited to 20,000. They will only go up to 40,000. And we do cross collections with TPG and Meta as we did last season. So if some of you got money through EPS, we can't collect that on your behalf, and you still to pay them, and you still use us. You know, if that's something that you did. And then the only other thing that's really important here, and the question will be asked again, and that's okay. If you got pre-wrap and wrap, wrap is the in-season fee assistance, pre-wrap is the pre-season money. Wrap does not kick in until twice the amount of fees are acknowledged by the IRS that you got in pre-wrap. So if you got $5,000 in pre-wrap, wrap will kick in at $10,001, you'll get 50 cents. That's to ensure that there's enough to repay and still create something for you on the back end. We do not want to put a situation where we're eating up all your fees because you got too much or where there wasn't enough room to ensure we collect on what was lent. We want to offer this money to you in a safe, helpful manner without creating a situation where so much is coming due once you start getting funding that you can't operate, or that you don't have enough to cover what you'd already received. We feel like that's important, and so far it's worked. Offices haven't typically been as upset with Republic about when we're collecting back and what we're collecting back because there's still enough left over. We're not just wiping out your fees when funding occurs. Okay? Any questions? No questions, Michelle?
No, it doesn't look like it. Most of the questions that they're asking is like for net spend, and you will eventually get to that in a later slide.
Oh, they're going to love that slide. Okay. All right, disbursement options. We're actually here. So our disbursement options are check, direct deposit, net spend, and Walmart direct to cash. Listen, I know Walmart direct to cash is just a handful. We know it's not burning down the house. But direct deposits actually overtook checks last year. We had more direct deposits than we ever had in any year previous, and that was more than checks. even with our flip to check. It was pretty wild. But new for you all, which there's one real caveat to this that's awesome, is you have the NetSpend prepaid card. Okay, now here's the deal. Here's the unique thing about NetSpend. NetSpend actually makes the funds available on the card from the ACH file date, not the funds effective date, okay? So let's say that you have a taxpayer that's filed on a NetSpend card, right? And we get a file on the 18th that says the money is going to be here on the 22nd. As opposed to that card being activated with funds available on the 22nd, those funds are loaded on that card on the 18th. So it's typically anywhere from 4 to 7 days in advance of the funds actually hitting the bank, because NetSpend's front loading them from the ACH file. So what you may or may not know is banks receive a file that says this money is coming, and it's how we coordinate things together to make it available by that date for your taxpayers. We typically find out a few days in advance, anywhere from 4 to 7 days in advance. Well, NetSpend, being the larger operation it is, they're actually going to front load your cards from the ACH file date. So if you have taxpayers that have gotten cards historically, when they get a card this year, that card is going to be loaded earlier than what they were accustomed to. It's going to be a little surprising to them, because they're not going to see that money's coming out till this day, yet money's going to be available on the card earlier. They may call you and ask you why. It's just something that NetSpend does. Don't be surprised. It's normal, but it's nice. It really looks good on you, because they think you did something special to make it happen. Any questions?
Can they use the same card from this previous year? Yes.
Yes. When they come in and they enter in if they've kept that card, they can use that from the same year. It's just that you, as the preparer with blank cards, cannot use those blank cards year after year. They issue new cards to you. But the taxpayer, if they upgraded to a permanent card, they absolutely can still use that card. That's actually NetSpend's hope, that more taxpayers will do that.
So what they'll need to do is bring in the information as far as the routing and the account number goes, so that way you can enter it into the system, correct?
I need to double check on that. I don't know. I don't believe it's handled as an ACH. I believe it's handled with respect to the card, so it can still be front loaded. I'll need to double check on that and get back with you on that.
Perfect.
Because if you use the routing transit and the DAN, then that's an ACH, and that's 48 hours from the time delivered, versus the card, which is front loaded. So I believe it's based on the card, but I'll check and let you know.
And then, just out of curiosity, if they received a NetSpend card from like one of our competitors, are they going to be able to use it with our offices?
I believe a NetSpend card is unique to the taxpayer. It is not with respect to the program used. I'll double check, but I'm pretty sure that NetSpend cards are agnostic. As long as that card had issued funds on it and is held by that taxpayer, I believe it works. It's just new cards don't translate, cards that haven't been used.
Perfect. Are there any fees associated with the NetSpend prepaid card, and if so, how much? You have that on the website, don't you?
Yeah, it's on the website, but that's a good question for this reason in particular, okay? I'm sure many of you have been in this game a long time. We know what most taxpayers actually do with a card. They go to an ATM, they do the daily limit, they hit it, they go back, they do the daily limit. Over 4 days, they'll go to an ATM and do the daily limit to get their money out. They can do the over-the-counter for $20 and get usually what's all on their card in a single instance, if that's what they're choosing to do. We'd hope that they'd use their cards for transactions and purchases, rather than just try to get all the cash off, like the card's suddenly going to lose its cash if they don't. But if in the instance they're the type of client that goes to an ATM and does a data limit every day to get it out, they end up paying more than if they just did the over-the-counter because it's a net spend paid Visa card. So they actually have the ability under the Visa agreement to do this. So they go to the bank, can pay the over-the-counter the fee and get more and end up paying less. But in terms of the PIN versus signature transactions over the counter and use, I mean, there are free options, but there are also options that that cost. It would take more time than we have here to go through that for all the various circumstances. If you go to the website, we list what those are, and when you get the packet, there's a brochure that has it in there as well.
Is there a particular bank that they can go to get all of their money up front with that $20 fee, or is it just most any banks?
Again, you need to go through the documentation pertaining to net spend on the site. It's not that there's any particular bank. There are a variety, and it's based on what's covered under, the terms of whoever they have an agreement with, but you'll need to look on there. There's no significant, this bank. No, go look at it and you'll see. Because what will happen is most offices will establish who that is close to them and say, go here. And then the bank also gets accustomed to seeing people come in there, because the first couple times it seems like the person at the counter is a little dense. And then as they get used to people coming in, it becomes a little easier, as with anything.
And as far as all the fee structures associated with the net spend, I will head over to Republic website and find it for you guys and post it to the group so that you're well aware of it, other than what they mail you out to show you.
Any other questions?
Will Wells Fargo be the check cashing bank again this year and fee still $7?
That's the next slide. Thank you so much for going to the next slide. The fee at Wells Fargo is normally $7, but can go up to $7.50, up to $8,000. Now keep in mind, the way our system works is it defaults to check stock based on the state you're in. So Republic's in 5 states. If you're in one of those 5 states, it'll default to Republic. You can change it to Wells Fargo. And checks can be used across offices as long as they don't cross banks. So you can't use Wells Fargo checks in a Republic Bank check stock office or vice versa. But if you have an office, you run out of checks, and it's going to take you 2 days to get them, and you have an office that has Wells Fargo checks, you can use those to help get you by. You want to let us know, but sometimes that helps because you didn't realize you ran out of checks, and you can't wait 2 days to get them. You need them right away. But here's the fees associated with the check cashing. I would advise this, though. This is always really smart. If you're in an area that doesn't have a Wells Fargo or a Republic Bank, go out there and get our check cashing agreement and take it to a local branch just to show it to them. They will typically honor our checks and make it easier for you. I mean, a lot of people these days use the Walmart outside of the Wells Fargo, but some people have a preference if it's on the Wells Fargo check stock to do as Wells Fargo if there's one near you. But we do have a check cashing agreement that the banks will accept. And as I said, once they get used to a couple people coming in, it goes real smooth. But if you have a bank near you, it makes it easier to make sure they have that. Because the last thing you want is someone coming back into your office and saying, I had problems cashing my check, and you're like, oh my gosh, I got enough stuff to worry about than to have to deal with this. We want to make that process as easy for you as possible. And then I got to save something towards the end that I'm really excited about this. We put it out there on our site in terms of Republic Refund, but it's not out there for any of the marketing materials. We made another change this year, y'all, and you're going to love it. For RT checks, if any of you remember what time we hung those out there, 4 p.m., guess what? We're hanging RT checks out there at 10 a.m. this year. 6 hours earlier, Eastern Standard Time, RT checks will be made available to you, because we heard a lot of you say, wait a second, I hate getting checks in the evening. You know, that's a busy time for me, or I'm trying to get out of there and I'm printing all these checks and calling people to come get them. I'd rather have it be in the morning so I can print these and have them come get them throughout the day and get them all organized. So RT checks will be available to print at 10 a.m. Eastern Standard Time, not 4 p.m. Eastern Standard Time.
That is great news.
And then Walmart, oh, go ahead.
Somebody wanted to make sure that you clarified. Did he say I can go to Wells Fargo to pick up check stock if I run out of checks?
No. What I'm saying is, if you have an office near you, or you're, a part of a group of offices that work together, even though you even may be competitors, if you run out of check stock, you can get checks of the same bank from another office to use if you let us know. So for instance, if you run out of checks, another office using Republic, a tax office, you can't go to Wells Fargo because that check stock is not in our system under the checks that we provide. Those are different checks than our checks. Our checks are very specific for taxpayer issuing loans and refunds. Oh, everybody, if you're not aware, when you go into republicrefund.com, on the right-hand side, the very first report, there's a link under it. If you click on that, it shows you the taxpayers that are set to fund in the next 24 hours so you know what's coming. If you're not using it, use it. It helps you let you know what your day is going to be like the next day, especially with us making checks available out there at 10 a.m. A lot of preparers weren't using that because it wasn't available till 4 p.m., so they were only getting accustomed towards the afternoon as to what was going to come. Now that we're doing it 10 a.m., make sure you go look at that report on the right-hand side. Under there's a link that'll show you the taxpayers' refunds that are coming for the next day.
There's also some of our tax preparers have noticed that this past month they were receiving emails of when direct deposits were going to hit customers' accounts. Is that something new that's going to be going forward?
I can't say 100% that we're going to have that fully released for this season to receive regularly. We're making improvements to our reporting and processes, so I would like to say yes, but I can't say with 100% certainty that's the case. My job is to try to improve this to make it better for you, and you feel like you guys are with the best bank meeting all your needs. So I'm working on improving reporting and processes to make your job easier, and that's one of them. I cannot say with certainty that's going to go into play in full force this season. I'm glad that some of you have noticed that that was occurring, though.
It was a nice feature. Is there a fee for the Walmart Direct to Cash?
The Walmart Direct to Cash is incorporated into the cost. I believe we take it out on the front end. It's typically the $6, but it's taken from the taxpayer's refund, if I'm not mistaken. I don't believe any taxpayers that you've sent into Walmart Direct to Cash are paying for that. It's already been incorporated into the fee associated with from their refund. We're the only bank that actually did the agreement with Walmart where we paid for that with them. So we collect that back, at the prorated amount as opposed to the taxpayer paying at Walmart. If any of you notice that not to be the case, let me know. But I do not believe that there is a fee that they're paying at the time of that. I mean, there's so few of them, that's part of the problem. We don't have a whole lot of Walmart Direct to Cashes, so I don't have a whole lot of instances where I could see no one's expressed to me that they paid a fee when they did the Walmart Direct to Cash with Walmart.
There's a lot of great suggestions from people on my questions as far as check cashing places. Somebody recommended that you actually look into like Sheets or Wawa because they have a machine to where it's not supposed to charge you a fee to cash the check. So if you've got one near you, I would look into that. if you have a Kroger's near you, they also started doing charging a 50-cent fee for cashing checks. So you may want to look into that one as well. And
yeah, Kroger basically figured out that if you got someone to cash the check in there, they'd spend money on groceries, which is what whole reason why Walmart started doing this, because they realized people spend money in Walmart. So other people are starting to catch on.
well, as far as like Wawa and where did it go? Sheets, it's if you take your net spend card that there's not a fee to take the money out. So yeah, definitely. If you're going to start offering those this season, I would actually look into it so that way you can tell your customers if they want to take their money out, go to either Wawa or go to Sheets. And somebody had a question as far as the Walmart disbursement. Has the process improved this season or this upcoming season?
Okay, so I'm really glad someone asked that question. Listen, I love you guys. This has been one of the best presentations I've done this year because you've asked good questions. I wish you could rub off on some other people. So here's the problem, okay? Just being candid with you guys. The issue that we've run into in particular isn't with respects to the process. It's typically the shortcoming of the agent at Walmart not understanding the process or iterating incorrect information, all right? So when the taxpayer goes in, they have a copy of their ID. They have to relate their social security number and the ID information as it was entered in from the bank application. Either the person at Walmart is not entering in that information correctly, or some information is conveyed inaccurately. In 99% of the circumstances, it's not the process itself, it's, what's the best way to say it? User error. It's because a lot of times we'll get calls with someone there because, you know, you're, as preparers, you deal really closely with your taxpayers, and through the course of the conversation, what we're finding is that what we see in the system is not what was there. They miskeyed something. They didn't enter it in right, you know, something along those lines. So there hasn't really been a medium for us for the process to improve as much as it's been calling up branches and educating them on the agreement and how that process is followed. And then sometimes we even get us ourselves, the Walmart person, on the phone, and we tell them, you entered in the wrong thing. And they're so embarrassed, they like hang up the phone on us. And, you know, so no, if you have any suggestions, we'd love to hear it. But typically, it's not the process that's an issue. It's the individuals involved, if that makes any sense. And then I saw this one, Walmart also verifies checks then refuses to cash them. Again, that's typically an agent that's the issue. If the check was verified, they should cash the check. But at times, we're not there to hear the argument that the Walmart customer service person gets into with the person that ends up being like where suddenly we now have a police report because someone threatened in Walmart. It's just, it's, in some instances, it's laughable. But if in the instance that occurs, we can set a check to re-verify, or we can help in any circumstance where we can come in that situation to assist. But even sometimes when they have the bank on the phone, you just have someone that's been empowered to be, jerk is the best word I can come up with. Any other questions?
Mostly everything that you've gone over as far as Walmart.
Okay. So in terms of our support, couple things you want to be aware of. We do taxpayer text updates. Please go into Republic Refund, log in to the office info, and look at the supplies that you can order outside of what comes to you. You know, maybe you want an all-weather banner. Say again?
As far as marketing goes, are you going to have them in Spanish?
We do have things in Spanish, but you'll have to go to republicrefund.com to review to see if what's out there in Spanish is acceptable. We are certainly accepting suggestions if what you feel like we have in Spanish is not sufficient and would like to make some additional suggestions. Now, unfortunately, with it being November, any suggestions to add items would really go to next year, but we did go back through all of our documentation that was in Spanish to have it re-reviewed by a third party, and I think there was something added as well as it related to one of the desktop tents. But we do have some options in English and Spanish, but we're working on more. But if you have any suggestions, do not hesitate to send that to enroll@republicbank.com. Love to hear it and provide it to marketing. There's always an opportunity to do better there. So again, go to republicrefund.com, log in, see the tools you have available. Also set up the text updates for checks, because a lot of you set up the check schedule for when it sent out that text to taxpayers last year based on the 4 p.m. time frame, because we released loan checks in real time, but RTs weren't going out till 4 p.m. daily. If we're doing it that at 10 a.m., you might want to relook at the schedule you have for sending out those texts, because that's 6 hours earlier, okay? Taxpayers can check on the status of their refund at republictaxpayer.com. I would encourage you to go to Republic Bank Tax Refund Solutions and install the mobile app. So like if you're out and about at times where you have to be, you can go look at that mobile app to see some items when you're not sitting in front of your computer. Online tools are obviously from republicrefund.com. And then the marketing assistance, we do send out free marketing, but there are additional items to order. You know, I personally like the all-weather banner. It's really big, and the interior window cling. But everybody has their own preference for their office and based on the way it's set up. Whatever works best for you. Just remember, with the window cling, make sure it's facing outward. Any other questions?
Somebody wanted you to reiterate, did you say new offices can apply for preseason wraps even if new EFIN?
Pre-wrap is eligible to new offices to Republic that have a prior verifiable history, because you had to have had at least 50 funded bank products in the previous year in order to be eligible. So if you're a brand new office that has no history, then no, because you don't have anything to determine what amount you'd be eligible for. But if you're a new office to Republic with a prior history, then you're absolutely allowed to apply. You have to have had at least 50 funded bank products, and then your tax prep fees are determined the amount that you can receive. But that's how we determine what you can get. So if you're brand new, there's no way to assess what we would be eligible to provide you, because there's no history for which to base it upon. Any other questions?
Will we be looking for customers' refund information under Republic Refund or through CIT software?
So as it relates to bank products, the information for the taxpayer's refund being released, really both. CIT does a good job of that as well, from providing the information that's provided out in the records that we provide, but it's a matter of, you know, going to the source as it relates to bank product, because the money funds here. So although CIT does an excellent job because we receive the money, it's best as it relates to bank products to look on our site only because we receive the money. But that doesn't mean CIT doesn't do a great job. And we also don't handle non-bank product returns for which they're receiving a refund as well. So, you know, I believe either. But just because we're the source of the money, I personally like to go to where the source of receives the funds, because that information, although available through CIT, also allows you to inquire if there's some, you know, other question you may have. For instance, the refund that was received was different than what the act amount was. We can typically see something to tell you that, although the truth is I think CIT may be able to do that as well. So really a matter of preference for you. Any other questions?
Check printing website will be the same. Yes. So in the software on the online version, if you go to print checks, it will take you to the online check printer. If you're in the desktop version, then yes, you will be directed to the online check printer to print out your checks.
Any other questions?
Yeah, any other questions? Did I miss the EA customer pay no fee to the office discussion?
No, you did not. The EA customer pay is not an option for you here.
Yes, you can do the pre-acks in the online software.
Yes, absolutely. Whether it's online or desktop, it's absolutely an option. Just so you know, too, there is a VIP option that we put most of CIT in. So most, if not all, of CIT comes in through the VIP option, which is the Tier 2 team. The only ones that don't come through are the new offices that we have not yet added. But when CIT calls, it comes through our Tier 2 team.
As far as the software, that will deploy after Thanksgiving. And of course, we'll start doing our training and onboarding and all that kind of good stuff once we get the new software, so that way you get trained properly for the season. Did we go over the incentive for NetSpend?
Michelle, you want to ask me about that off the... No, we did not.
Okay, so if you guys have any kind of questions, just let us know. This is recorded, so I will post it to our group, which is Community Income Tax Partners. If you have not already, please go and join the group so that way you can get updates. And of course, I'll post the information as far as the fees go for the NetSpend card. As far as bank enrollments, we are currently working on that. Alexis will send out more information. And as always, we thank you for being a CIT partner.
Thank you very much for having me today, you all. I appreciate the time being able to spend with you. These were excellent questions.
Very much so. Thank you, Carter.
Thank you.